Home builders rallying hard in the third quarter, handily outperforming the S&P 500. Can the sector keep building on the momentum in the fourth quarter? Well, joining us with names that should be on your radar is Zelman Associates co-founder Ivy Zelman. Ivy, it's great to have you back on. It's kind of incredible. I'm looking at a chart right now of the ITB Home Builders Index. I mean, we had gains through the first half of the year, then we gave them all up, and then we had a big rebound starting in July. Can the gains continue?
Well, first, thanks for having me. And the builders have been on a tear. They're actually trading at cycle highs. Looking at multiples, they're trading about 2.3 times book value. And while the stocks have gone up, they've gone up really with the growth of book value, not because of higher multiples, but a higher book. And I think for them to break out here, we think it's going to be challenging. They are definitely at cycle highs, though. And they benefited, as they always have, when the Fed is anticipated to be cutting and rates are going down. Our home building stocks always work, historically, other than recession. Then they don't work.
Gotcha. So, I mean, so this is really just a buy the rumor, sell the news type of dynamic for home builders. What would it take then to see a breakout?
Well, I think that the necessarily buy on the rumor, sell the news, but their performance has been very resilient despite the backup in rates that we saw. What people want to see now is not only a continuation of strong volume, but they want to see a resumption of pricing power, which I don't think they're going to have, unfortunately, because they're heavily incentivizing, especially for that first-time buyer. They're buying mortgage rates down into the fours, even into the high threes for 30 years, which is a great buy for the consumer, but that won't translate into margin expansion. And frankly, they're going to run out of low-cost land that they bought pre-2020, likely not till 26, but I think margins are in the process of a downward trajectory back to more normalized levels, and that might not be as favorable with investors.
So, Ivy, looking at the different segments between luxury, home builders, and more mainstream, who's better positioned here?
Well, frankly, we think the higher end is better positioned. I think that consumer is not stretched. They're definitely benefiting from substantial wealth appreciation through their home, their piggy bank. And we're seeing continued strong demand in that segment. So I think those builders will outperform. One of the reasons we like Toll Brothers right now is one of our top picks.